GBPUSD, another phenomenal move we witnessed here on the GBPUSD in the last 24 hours. And for those of you who have been part of this journey, well done to you for being on standby to capitalize on this move. Well, currently the pound sterling is under pressure due to the Bank of England's pessimistic forecast warning of a potential recession for the United Kingdom's economy for next year. And as a result of this, the immediate reaction to the pound has been very negative. As you can see, price has gone through a very strong bearish move to the downside. Now let's take a quick look at how we started our trading decisions yesterday, what really led to what we did here. Now, during our live session yesterday, we looked at how participants in the market was reacting to this current market structure since the beginning of the week, and we saw this range here between the 1.239 and the 1.23650 area, where I was telling us yesterday that I took advantage of a buy position had the breakout of that resistance line. And in fact, we saw price moved about 36 pips before that engulfing bearish candle brought us back into the zone. And one of the things we said here yesterday is that if price will come back into the structure and we see buy pressure resume, we want to be capitalizing on an uptrend continuation, and that is price must respect this ascending trend line to push price to the upside. I'm sure some of us will have taken some buy position around that area because of the consolidation phase that happened around that trend line, which must have been taken out in a loss at this point. However, we mentioned here yesterday that if price at any point breaks down that ascending trend line, then a retest of structure will further give us a signal to join a decline to the downside. And in fact, I personally took advantage of the breakdown here. Well, some of us will have sold around this area. If you had done that, that means you caught that move early enough, but I took it right here at the breakdown of that support line, had a 1.23650 level to inside my first sell position for the week, and since then price action has nosedived to the downside and has moved over 60 pips in profit at this point. And for those of you who took advantage of this opportunity, well done and kudos to you for being on standby. And the most important thing you want to be doing right now is to move your stop losses, secure the current sell position anywhere around the 1.235 and 1.234 seems most appropriate to secure this position while we look out for new opportunities in this market. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue selling, or are there chances that buyers can still come into this market? Now, let's scale up into the higher time frame. So for those of you who had missed out on our session yesterday, you have the privilege of being on the same page with us. Now, on the daily time frame, we saw a very simple setup, which is expected to guide our trading decisions for this week. Now, the first and first here is that since price action tested that high, had a 1.314 here in the month of June, price had nosedived to the downside and along the line has formed a series of lower highs in that regard. And if we connected a series of lower highs, we have a couple of descending trend line we shall be using to guide our trading decisions for this week. Now, in addition to that trend line, as you will see here, following that strong impulsive move to the downside, we saw that throughout the month of October, it became difficult for sellers to break through the 1.2100 zone. As you will see, throughout the month of October, at no point in time did we see price break down that structure, leading to that engulfing bullish candle that's broke out of our key level for the week, situated at the 1.231. So we had our key level right here, which has been played a major role in determining direction of price action since the month of March. It was more or less a buy niche at some point before price did break down the structure in the month of September. And since the breakdown, we can see price fell into a consolidation phase, giving us an insight into the indecision there. Well, I felt this consolidation phase was looking more like a reversal pattern for me if we look at this impulsive move right here. And whenever we identify a potential reversal pattern like double bottom structures, we want to be marking out the neckline, which coincidentally shares a confluence with our key level at the 1.231. And to validate this reversal pattern, we do want to be seeing price action break out of that neckline, retest of structure to incite an uptrend move. Now, as at last week Friday, we saw an engulfing bullish candle breaking out of the neckline. Price came into the descending trend line, and we saw a sharp rejection here. So how do we intend to capitalize on this one? Now, to do this, we scale down into the 4 hours time frame where we begin to see things more clearly. And on the 4 hours time frame, I took into consideration the nature of price action since the second week of the month of October. And one key factor about the structure here is how important that area between the 1.2330 level and the 1.23, which happens to be our key level on the daily time frame, had played a major role in negating all attempt by the buyers to break through that area, hereby making that area a robust supply zone to work with. And not until last week we finally saw the breakout of that supply zone. And from a technical standpoint, whenever price action breaks out of a key structure such as this, we expect some retracement back into structure to incite an uptrend move. Now, in addition to that is this ascending trend line I spotted here. And as you can see, price action also broke out of the ascending trend line on Friday, just like it did broke out of the supply zone here. Now, the bearish momentum we have been witnessing since the beginning of the week is gradually approaching the structure, which is giving us the inclination that we might be looking forward to a retest of the structure that was broken to incite an uptrend move. Now, the question we want to be asking going into the New York session is how far will this bearish momentum go before the next uptrend move will happen? So to guide this idea, to help us position ourselves for that, we are going to be focusing on this area between the 1.23 and the 1.2200 area. So depending on how price reacts to this area will be determining what our next line of action will be. Another thing I would like to call our attention to is how this ascending trend line shares a beautiful confluence with that 1.2300 area. So what we are going to be doing today is to exercise patience and see how market participants in this market will be reacting to the 1.2300 psychological level to determine what our next line of action will be. So if we are going to be seeing something like a double bottom structure around this area, maybe price action test the ascending trend line, and we begin to see signs that sellers are finding it difficult to break through the ascending trend line, then we will definitely be getting ready for an uptrend continuation. However, if price will break down the 1.23, a retest of structure will confirm that we can add more sell position. Then we want to wait and see how the market will be reacting to the 1.22200 level to decide if we are going to be going further south or getting ready to join another move to the upside. So you can see how crucial this juncture is, and it's very, very important that we exercise patience and wait to see how the market will be reacting to this previous supply zone, which I'm of the opinion could turn out to be new platform for buying opportunities going forward. So let's see how the market will play out here. For those of us who still have a sell position, I've told you how to move your stop loss, secure the current sell position, and let's see how the market will react. So a quick recap here, a breakdown retest of the 1.23 welcomes more selling opportunity, and wait to see how the market will react to the 1.22 area to know if we are going to be joining an uptrend or price will be going further to the south. However, if we begin to see buy pressure around this area, maybe around this structure, maybe double bottom structure, then we want to be getting ready to buy. Now, this whole confirmation around this crucial juncture may likely take between 8 to 24 hours before it forms. So we'll need quite to be very, very patient at this area, as we are at a very critical juncture in this particular market. So these are my views on the GBPUSD for today. So let's see how the market will play out around this area. And of course, by tomorrow, we shall be back here again to review how well these assets have been doing. If you have any questions whatsoever as regards to my explanations on this setup, or you need me to do some further clarifications to an area you really did not understand, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a yardstick to guide your independent trading decisions for today.